This week, Governor Jeff Landry signed into law 4 insurance reform bills, one of which was yours. Bring viewers up to date on what became law and how that will help, hopefully, provide some relief.
So we kind of looked at this holistically, like what can we do to attract insurance companies to come here? Because really, in my opinion, the only way to get rates down is 1, put on a fortified roof. That would help. And 2 is when another insurance company offers you a policy, the same policy you have, for a cheaper price. The 3-year rule, which was Representative Gabe Furman's bill, the chairman of insurance, nowhere in the country does that and nowhere in the world does that. And what that does is it prevents companies from managing their risk, and it keeps companies, frankly, out of the state of Louisiana. And then come January 1st, those companies can non-renew 5% of their riskiest policies, which would normally, in every other state and every other entity in the world, would not be renewed. And then they can come to Citizens, and that's where, Citizens takes over the Citizens Insurance Plan, which is the insurer of last resort. Matthew Willard's bill, a Democrat from New Orleans on the House side, he had a bill to lift the sunset on the Fortified Roof program. We got to get as many fortified roofs as possible if we're going to live on the coast, which is where I live. So that was important. The legislature were also funding, I think, another $15 million into the Fortified Roof program. The commissioner, Tim Temple, is going to work for next year to get a dedicated funding source for the Fortified Roof program. Next, we had Heather Cloud's bill, senator from Turkey Creek, that deals with the way insurance companies can set their rates. We're one of the few states that restricts them and requires the approval of the commissioner to do that, and the commissioner can only approve that once a year. It's a very archaic, draconian way of doing things. My bill, Senate Bill 323, kind of revamps the entire claims process. I think everybody will admit who has filed a claim recently that this claims process is not a fun process. And it shouldn't be a process to where you need to hire a lawyer to get your claim paid. So what we're doing is we're giving more time for the insurance companies to pay that claim. We're requiring a written proof of loss, which is basically the adjuster's report. I think we're the only ones in the country that do not require that. And by not requiring that, it's very hard to determine when a claim starts.
Do you honestly believe that there is a balance in the insurance reform legislation that really does take into consideration the wants and the needs of the consumer?
Every bill we filed and every bill in this package has one thing in mind, and that's the consumer. If an insurance company is looking at Louisiana and says, I'm not going to come there because of their regulatory environment or because of their litigation environment, that is an anti-consumer problem, right? If they don't come to Louisiana and write policies, that is not pro-consumer. When companies like State Farm and Allstate decided last year to pull out of the state of California because of their regulatory environment, their litigation environment, that is a terrible thing for consumers, because now they just lost 2 gigantic insurers. If they're willing to pull out of California, they're certainly willing to pull out of Louisiana, and that would not be a good thing for consumers.
It's been suggested one possible solution is to create a reinsurance fund, if you will, some assistance for reinsurance. Has that been kicked around this legislative session as a possible solution?
Do we do what Florida did and create our own reinsurance program? We're going to do a task force on that this summer. That is an intriguing idea. The biggest problem is that works great as long as you don't have a major storm the first 4 or 5 years, so you can build up enough capital to pay for that.
We have this terrible history of insurance companies going belly up. So in that process, are there pretty stringent requirements that these companies that get to be expedited are solvent and can prove they're solvent?
We filed legislation that increases their solvency rates. I know the commissioner, they've hired a third party to monitor the reinsurance levels of the companies that got some of the investment money for the program we did last year to incentivize the incentive program to monitor their reinsurance levels. We have looked at that and said, look, for the incentive program, you cannot cluster all your policies in certain parishes. You've got to spread out, because if they cluster all their policies in one parish and God forbid a hurricane hits that parish, no insurance company can pay that amount of claims. Property insurance was more of all winds. Auto insurance has been had a couple of losses, had a couple of wins, still have some bills up in the air then there's still other bills that we might amend some things. So there's several bills out there. We passed one off the Senate floor yesterday, which was Jack McFarland's bill on direct action. Direct action is something where we're one of only 2 states in the country where insurance companies are named in the lawsuit. It's something where we're an outlier, and it's something that keeps insurance companies from coming here. We have things like going from 1 year to 2 year on the prescriptive period. We're only one of 2 states that does that as well.
All right, Senator Talbot, final thoughts before we go.
Again, the way we're going to get insurance rates down is we need competition. We need insurance companies to come to Louisiana and start writing policies so we can have some competition. And, that was the premise behind these bills. And anytime you have availability, translates into affordability, and that's what we want for the consumer.
Thank you so much for your time.
All right. Thank you.